Welcome to Zion Gate Reaching the World podcast. My name is Shelia, and I'll be your host. So we created this podcast to talk about things that happens in everybody's life, and we're taking it from a practical and a spiritual perspective. So hopefully, and we're sure that you will enjoy this podcast and it'll be useful to you. So today I'm going to introduce my guest. His name is Vince Clark. He's a self-made entrepreneur and owner of a rapidly growing, award-winning insurance agency in Kankakee, Illinois, specializing in auto, homeowners, renters, disability, and life insurance. His agency is committed to helping individuals and families find the right coverage for their needs. A proud Kankakee native,
There we go.
Vince is the son of Vincent and Alicia Clark. After graduating from Olivet Nazarene University in 2015 with a BS in marketing, he went in to build a successful business rooted in his passion for service and community. And I'm going to repeat and say that again. A business rooted in his passion for service and community. His business agency has not only earned accolades for its rapid growth, but also is committed to providing exceptional customer service. So, Vince, welcome.
Thank you. I appreciate that. Thank you so much.
So, Vince, can you tell us a little bit about yourself and why you chose to have a business in the insurance industry?
Yeah, it's sort of a sad story, but it kind of led to how all this happened. But out of college, I actually went into corporate America, did sales, had a lot of success there, a lot of promotions. And I had my first kid, as a lot of people that may be listening to this know about. He ended up passing away, all right, unexpectedly, daycare incident, kind of wild how it all happened. When that actually happened to me, all right, and he did have we had a life policy on him, right? So everything was taken care of. But when that happened to me, I had to figure out how I can sort of take better care of my family in a way that was more efficient with time as well, all right? But my insurance agent, all right, gave me a call because I kind of switched jobs quickly after that, trying to get this all figured out. He had my son's life insurance policy, happened to be an agent for the same company that I'm an agent for, right? And he just had a conversation with me, like, what's going on? He was one of my business, or still is one of my business mentors, right? And I told him what I was thinking, where I was trying to go in terms of entrepreneurship, and he basically stood in his hand and said, listen, this is what I do, this is what it looks like, and I can help you get there. So long story short, that's pretty much how it happened. A tragedy sort of led to the blessing, and now I'm able to help a lot more people out, just like, how he helped me out.
Yeah. I love that. Taking a tragedy and doing something with it.
Yeah, at the end of the day, if something like that happens, I hope, no one has to go through what I had to go through. But when something like that happens, you kind of got to have a mindset. You got to realize that either, this can sort of derail you, or, you can use all this, I guess, energy that you have to, take things to the next level. It's a choice that you have to make. So,
right.
I decided to make it as positive as I can. And I don't know if I would be here, right, if I didn't go through what I went through with that. So, yeah, now
Right.
we're here today.
Right. So I'm going to ask you, why is it important to have life insurance?
So it's super important because at the end of the day, right, our time here is only limited. And when your time comes to no longer be here on this earth, there's only two options. Either you are prepared, or your family is prepared, or they're not prepared. And a lot of people don't necessarily think about it like this, but whose job is it to make sure that our family is prepared for that? It's ours.
Right.
So that's why it's super important. That's why I'm passionate about it. That's why we have a lot of conversations every single day with people about it, because it's really our responsibility. It's selfless. It's us taking care of our family. When somebody passes away, it's already hard. Someone just passed. Someone just died. Think about your family, how they'll feel, right, when that happens. So why add to that another burden, right? So that's essentially, what life insurance does.
Yes. Because to me, it's hard to grieve the loss of someone.
Mm-hmm.
And then you got to worry how you're going to pay the rent, the mortgage, the household expenses, maybe your kids' school fees.
Right.
And I mean, you would, as a responsible person, and I'm quite sure this is what God wants you to do, to take care of your family, to make sure you're not leaving people behind without anything.
Right.
So yeah, I truly believe it's important, because I know you've seen, as well as other people have seen, on social media, people have those GoFundMe pages, and it's sad.
It is. Yeah.
It's sad, because how are you going to bury someone you love and you don't have the funds?
Yeah.
So it's prudent to take the steps now to make sure that you have that lined up for your loved ones. So what I'm going to ask you is, how do you know how much life insurance you should have?
So, I mean, for an adult, there's a entire calculation that we have. But, I mean, I'll tell you this. If you're making decent money, like if you're making like $40,000, for example, and I don't know this number off the top of my head, but you should probably have somewhere between like $900 and $1.2 million in life insurance, especially, right, if you have a really young family. You have to think about that. Let's say, there's a husband and a wife in a household, and they have, a 2-year-old and a 4-year-old, and the husband happens to be the breadwinner in the household. He passes away. You have a mortgage left. You have to buy your kids clothes. But now all of those financial responsibilities is left behind for just one individual. You had 2 incomes, now you have 1, right? So that's why, $1.2 million for $40,000 may sound like a lot of money, right? But it's really not when you consider how long that money has to last. And there's a strategic thing that you can do to kind of make sure it lasts forever. We won't get into that, right? But yeah, I mean, if you only have $60,000 in life insurance, 20 of that is already gone with final expenses. Now you have 40 left.
Right.
That's 1 year's salary. You have to raise that 2-year-old for another 16 years.
Right.
So yeah, I mean, that's a great question. People don't necessarily always realize how much life insurance they actually need, right? If something were to go wrong, that things need to be taken care of.
Now, I've been to a couple of insurance agencies and talking to them about my life insurance policy, and a lot of times I will go in there and it was overwhelming. I'm like, I don't know what you're talking about. And I find that this common phrase that a lot of people heard before, explain to me like I'm 5 years old. And then I would like to take my little notes and write it down, because I'm older now and I forget stuff.
Yeah.
But I think it's
too.
important. I think it's important to review your life insurance policy. So what do you say about that?
Oh, absolutely. So we have a process in my agency actually where every single life customer that we have, right? We'll call you, on your yearly review point, or whenever you started the policy. Like if you started in February, we'll call you every single February, because it's important to review your policy every single year, right? The reason for that is because the policy that you started with may not be enough if a life situation has changed. If we started you with a $300,000 policy to pay for your mortgage if you passed away while you were single with no kids, and we don't see you for 10 years, you may have gotten married and you may have 3 kids with a $300,000 life policy, right? So yeah, it's important to meet with your agent every single year, review your coverages, make sure you have enough coverage there. At some point, you got to get into final expense, whole life policies, and all that good stuff to make sure you have something later on after the term policies expire. So yeah, it's important to make sure, you just have that conversation every year. You have a yearly check-in with the doctor to make sure you're good. You should for sure make sure that your family has enough, or at least know what's going on with your life insurance every single year as well.
Right, and where to find it, right?
And where to find it. Make sure you have the correct phone numbers. Make sure your beneficiaries are correct, right? You don't want to run into a situation where, we've had this happen. Well, we didn't, but it can happen. You have husband and wife passes away, the wife is still listed as a beneficiary on the life policy, right? the husband passes away, there's no successor beneficiary after that. What happens at that point, right? So yeah, again, another reason to make sure you review your policies every single year, just to make sure everything is lined up correctly for you.
Okay. So what if someone says, well, I don't really need that because, I have life insurance at my job.
Mm-hmm.
Should they also have an additional life insurance policy?
Absolutely. Life insurance at work is phenomenal. I mean, you can get a ton of life insurance for like almost no money, right? The only and I always tell people, like, max that out, right? Get as much as you possibly can. It's super cheap. Go for it. But the only problem is long term, right? At some point, it's going to end for like 97% of the work policies that are out there.
Mm-hmm.
A lot of people don't realize this, but at some point, right? And I ask this question, and I kind of joke about it, but I ask customers, hey, so let me ask you this: do you plan on dying while you're working, or do you plan to die once you're retired at some point, right? Mm-hmm. People typically would like to think that they're going to pass away after their working years, right? Because if you pass away during your working years, that means you're still kind of young, right?
Right.
The only problem is once you retire, 97% of the time, you lose your life benefits at work. And then what do you have to do? You have to come see me at 70 years old and see if you qualify for a life policy, first of all, because who knows what the health is looking like at that point, all right? And if you do, it's going to be super expensive. And you don't want that expensive bill during your retirement years.
Okay.
So, work policies, like I said, they're great, but you still need your own outside of that for long-term planning.
And should people also be aware of if they're aging out of the policy?
Mm-hmm.
I mean, when they got it when they were young,
Mm-hmm.
it was good, but now they're in their 70s.
Mm-hmm.
Should they be aware of the changes that would happen?
Absolutely, and that again is why you want to meet yearly.
Mm-hmm.
You want to get ahead of that way before you get close to that point. Okay, there's some things that you can do to make sure that you got a good long-term plan in place. But if you never go see your insurance agent, right, whoever holds your life policies, you may get a letter in the mail that says, hey, you got 1 year left on this policy, and you may be 65 years old, right, on a fixed income at that point, or in retirement, right? Now, your options at that point are very limited. But if you start working this at 20, 30, 40 years old, you don't have to necessarily have to be put in a panic mode or try to figure this out, in retirement years or close to retirement years. So yeah, that again is why you want to meet with your agent every year.
Right. Okay, so earlier you said that if you have kids and they're young, $1 million is the amount of life insurance you should have?
Yeah, and that's based off of how much money you make too, right? I was basing that off of like maybe a $40,000 salary. I was like, if you make more, if you make $100,000 or $200,000, then you'll need a lot more for your family to sustain their life at that point.
So, but what happens when your kids are adult children?
So each individual family is different. Each person is different. So it's all circumstances, right? Mm-hmm. So let's say your kids are already grown out of the house, right? Let's say you're married, but let's say you still owe, I don't know, $300,000 on a mortgage, right? That would be something that you would want to protect. So the house can get paid off if anything does happen to you. So the spouse that's left behind doesn't have to worry about that, right? Just has to worry about her own expenses, own bills, all that good stuff. So, I mean, there's a lot of different scenarios out there that we can look at. If you are a 45-year-old person, single, and you don't own anything, right? And you're renting, right? Mm-hmm. Car is paid off. You don't have any kids. You don't care to leave anything behind. What do we have to worry about? It's just final expense at that point, making sure that your funeral cost is taken care of, so that your brothers and sisters don't have to come out of their pocket to put you on the ground, right? So it's all circumstantial, right? Everyone has a different scenario, but that's why it's important to meet and have a conversation with the agent. They can ask you those critical questions and help you decide, right, how much you need and what the plan is behind that.
Okay. So can you tell us what is the difference between term life and universal life?
Term life, let's do term life and whole life.
Okay,
right?
whole life.
Universal life is sort of sort of like a whole life policy term mix, all right? So it gets kind of weird, right? Come talk to me personally, like at the office, I can explain that to you. But the two major types is it's either whole life or term life, okay? Term life, basically, you can get a lot of insurance, a high dollar amount. So that $1.2 million that we talked about before, right? Most people would do that in term because you can get a large amount of coverage for very little money, right? It's really inexpensive. If the average 30-year-old were to come in and say, hey, Vince, can you quote me a $1.2 million policy? They will probably be shocked as to how inexpensive it is on a monthly basis, as long as they're healthy, all right? Whole life, right? Let me back up a little bit, I'm sorry. So that policy is designed to take care of basically your right now situation. Like I said, if you have young kids, you want a lot of insurance. If you have a lot of debt, i.e. a mortgage, you want to have a lot of insurance to cover that if anything were to happen to you. If you have, teenage kids, and you want to make sure you secure the fact that they may go off to college and get that paid for whether you're here or not, you want to have term insurance to handle that large expense, right? Whether you're here or not. So that's the purpose for term. It's temporary insurance to cover basically a premature death. Does that make sense?
Yes.
Okay. Whole life it does two things, okay? It's more so long term. Whole life is going to be there in the end. It's guaranteed as long as the premiums are paid. So when we all live to our nice, ripe age of, 80, 90 years old, right? That's the policy that will be in place at that time to make sure, final expenses are getting taken care of. And outside of final expenses, if you want to add more on top of that in whole life, like if you want $100,000, $200,000 on whole life, that extra money that's just basically saying I want to leave X amount of dollars behind for my children or my spouse, right? And make sure that that's there, even past, the term policies. So that's what whole life is for. Final expense and leaving a legacy behind.
Okay. And let's say, as God's will, and make it to 100.
Mm-hmm.
Does it go up that far?
Yeah. So some companies, their policies mature at 100. Maybe some other companies it's like 110 or 115 or 120. Depends on the company you're working with. But if you have a whole life policy, all right, term probably won't get you there. But if you have a whole life policy, what typically happens is once you reach a certain age or a certain point, they just give you your death benefit. So if your death benefit is $50,000 at the time in whole life, or 100 or whatever it may be, you get a nice little, I guess, happy birthday card with a check.
Okay.
That's pretty significant, and say, hey, your policy is mature now. Like here's your death benefit. Now you're basically self-insured. Pay for the funeral, and who knows? If you have nothing significant to take care of, I don't know, go to Aruba or something.
Right. Go on a vacation.